Hello everyone. So today we are going to be looking at something called engineered time and price theory. So for most of you, this is going to be the turning point in your trading career. When I had started, I wish someone had taught me something of this kind, where you have rules and trade something that you see. So for most times, whenever you're trading, price will draw to a certain level and you will see it reversing and you will wonder why is that happening, and that's what we call engineered time and price. So at specific times, price draws to a certain level and you see it reversing and you wonder why is price dropping at this certain level, why is price buying at this certain level. So this is what we are going to be looking at: engineered time and price theory. So this is a defined approach to understanding engineered time and price in the Australian dollar. So we shall be looking at the Australian dollar. We shall expose its secrets. We shall expose how we can buy the Australian dollar, how we can sell the Australian dollar pairs. So what you need is to sit back and understand whatever I'm going to teach you. So these are the basic concepts that we shall look at to understand this course. So our first topic, we shall look at time and price, then basic structure, then look at the different basic PD arrays, then understand the model, the buy model, the sell model, and the examples. So what is engineered time and price? So why do we have time and price? So understanding time and price is the key to unlock success in the forex industry. So without time and price, without time, price is irrelevant. So think of time and price as a milk shop. So if you sell milk, what time are you likely to open? Will you open in the morning? Will you open in the evening or in the afternoon? So most probably, if you have a milk shop, you will open in the morning and in the evening. Why? This is because the milk customers take milk in the morning and in the evening. So you will receive a lot of customers in the morning and evening. Well, you could receive some customers in the afternoon, but most of the customers will come in the morning and in the evening. So price is like that. We want to be in at times where we know price will be engineered to a specific level at a specific time, and we can define our entry range after engineering price to a certain level at a specific time. So in specific pairs, price is engineered to a specific level at a specific time every single day. Our duty as traders is to find out that specific time and level and use it to our opportunity. So if you understand what engineered time price is, you will find your edge and you will start seeing results whenever you trade. So the engineered opening range. So everything you seek is within the price opening range. So we want to be sellers above the open price and below, and buy below the open price whenever price is engineered to a level on a higher time frame. So whenever price trades to a certain higher time frame level, whenever it is engineered to a certain higher time frame level, we want to buy above, we want to sell above the opening price. And whenever price is engineered to another higher time frame level, we want to sell above, sorry, let me repeat that. So whenever price is engineered to a higher time frame level, we want to buy below the opening price, and whenever price is engineered to a certain higher time frame level, we want to sell above the opening price. So our opening price is our opening range. We want to buy above it. Sorry, we want to buy below it, and we want to sell above that opening range. So everything you seek is in these two candles. The first one is the bullish candle and the bearish candle. So in the bullish side, we want to mark the opening price of that candle. So from this range, from the open price to the low, this is our engineered open range. So in this range is where we look for buys. We want to buy within this engineered open range and target the high or the close. We do not need to predict the close. All we need is the open price and the low. Then we could take our entries in the engineered open range. So we buy in this level here and target the high or the close. So in the bearish side, we look at the open. The open is here and the high of this candle is at this level. So our duty is to sell within this engineered open range. So our engineered open range is the open and the high. So we need to buy in this level, the engineered open range, and target the low or the close. I will show you how we do that in the next episodes. So if you understand this concept, you will find profitability in your trading. Everything you seek is within this, the engineered open range, the bullish engineered open range, and the bearish engineered open range. So price is engineered to this high and price is engineered to this low. So from this engineered open range, we buy and target the high. Here in this engineered open range, we sell from this level here. I will show you how we can enter there and target this level here, same as this level here. So what you need to do is to understand this concept. If you don't understand it, rewatch, you will understand it. So now that we've gone through the engineered open range, we can look at the basic structure. So we have two structures. We have the bullish structure and the bearish structure. So the bullish market structure. So to understand structure, we need to understand higher time frame PD arrays or higher time frame levels. So price, let's say price opens at this level here. So when price opens at that level here, you mark the open price. You get? So when you mark the open price, you wait for price to drop into a higher time frame PD array. Sorry. So when price drops into a higher time frame PD array, you wait for it to drop there. So when price drops into this higher time frame PD array, you wait for it to shift structure. So it should break the last swing high before dropping into this higher time frame PD array. So when we break this swing high at this level here, we mark that level. So we wait for price to retrace back into that range. So this is our dealing range. So from this level here, this is our open price. So this is our engineered opening price range, from this low to this open price. So when price breaks this last swing high, all we wait for is price to retrace into this area here in our discount levels after breaking this swing high. So we consider that as a market structure shift. So what we look for is our buy entry here. I will show you all the rules you follow to get that level here. So this is how it looks in the charts. So price opens and trades to higher time frame fair value gap. I will show you how we mark this. So when price trades to this level here, what was the last swing high before trading into this level? It is this swing high. So we mark that level there. So when price breaks this swing high and we get a displacement, we want to see momentum and we close above this, we wait for a retracement into that level here. So this is where we want to look for our buy entry at that level after retracing with a market structure shift. So that is the bullish market structure shift. So for the bearish market structure shift, it's the same concept in a reverse way. So when price opens, we mark the open price. So we want to see price being engineered to a higher time frame PD array or a higher time frame resistance level in simple terms. So when price trades to that level, we wait for it to break the last swing low in that leg before hitting the higher time frame PD array. So whenever we break that last swing low, we wait for price to retrace into that level there. So that is our sell entry after retracing to this level there. So this is where we sell. So this is the bearish market structure shift after we break this swing low at this level here. So we hit a higher time frame level, price is engineered to that level. We hit a higher time frame level, we shift structure, then we wait for a retracement into our premium levels. So when price hits our premium level, we sell. I will show you how we sell at that level here. What rules do we follow? How do we sell after that happens? So this is it here. So you can see price opens, trades into a 1 hour order block. I will show you how we mark. So when price trades to a 1 hour order block, we wait for price to break the last swing low in this leg. So this was the last swing low before hitting this level there. So when price hits that level there and we see a displacement and we break this swing low, that is our market structure shift there. So we wait for price to retrace back into our premium levels and we could get our sell entry at that level here in this fair value gap. So that is the bearish market structure shift. So if you didn't understand these concepts, rewatch the video, you will understand these concepts, because this we are looking at the basics on how we shall come up to build our engineered time and price model. So thank you.